Hey guys, Ken Calcutt here with Cornerstone Financial Management. Wanted to give you a market update. It's been a few months since we got any info out to you, so a lot of news out there, a lot of things going on. Just want to let you know what we see. We're going to start with a chart that we normally go over in these review meetings. This is the S&P 500, and I want to start back here. These two green bars, this was election day and the day after. And then we come over here to today, and this is March 12th today we're shooting this. So what we saw from the election, we saw some pretty good emotional movement in the market, just kind of people excited about the future and things are going to be good. It was all emotion, nothing fundamentally changed. We saw some rallies. And then mid-February, we saw things start to kind of fall apart in the market. So where we're at today in the stock market is a few percentage points below where we were on the election day. All right, so what's happening here, fundamentals in the market are breaking down a little bit because of fears of a lot of uncertainty in the market. So I'm going to switch gears here and we're going to touch on some of those real quick. So here are some of the things that I think would explain what's going on with the market. I'll start with the negatives. Some of the negative impacts in the market right now, the multiples, and this is simply basically the price of stocks generally relative to their profits. All right, they call it PE ratio. A lot of people call it the multiple. The multiples had gotten pretty stretched when the S&P was at 6,100 back in February. That was probably a little too rich. Not surprising that they needed to come down. There was really no reason for stocks to go higher above 6,100. Multiples were stretched. Pretty logical that they came down. The sentiment has now shifted. The general sentiment in the market is negative. That's pushing things lower. And the momentum is obviously moving lower. So momentum does impact the stock market. Momentum works both ways, positive and negative. Right now the momentum is shifted negative and that's continuing to push things lower. Now some of the positives that I think could be helpful here, this recent pullback we're seeing in the market is actually a positive. I think the stock market's getting back to what I would call a healthy level. It's not overpriced, it's not oversold, it's fairly healthy at this level. So that pullback means we're now at a more appropriate level for stocks to move forward. Fed rate cuts, they're back on the table now. The more concerning the economic news gets, the more likely the Fed will start cutting rates. And when rates start getting cut, that's normally a catalyst for stock market to start moving forward or start moving higher. So that would be a positive. Even if they cut on negative news, the cut itself could be a positive catalyst for the markets. And that's what I expect we'll see probably before summertime. Cash on the sidelines. There's still $7-8 trillion in cash parked in money market funds that has not re-entered the market since the 2022 crash. So there's a lot of cash on the sidelines right now. When stocks get to a low enough point, this cash starts coming back into the market. Things get cheap enough where people feel like they're safe to start reinvesting this cash. So when that cash starts coming back into the market, stocks should go back up. When the Fed starts cutting rates, stocks will probably get a bump. And the pullback itself gets us back to a healthy level. Now the big question marks that's driving a lot of this uncertainty, tariffs, taxes, and federal spending. You hear it all over the news. What are the tariffs going to do? Are they going to extend the tax cuts? And federal spending, is it really going to be cut as substantially as they're saying? The reality is nobody knows the answer to any of those questions. There's a lot of speculation. There's a lot of opinions. Some of the opinions will end up being right, but right now, no one knows. These big question marks is what's causing the market to sell off because these could cause the economy to slow down. They could cause a recession. They could cause a lot of things, but they might not. And so the stock market is adjusting down mainly because of these concerns, and until we get clarity on these, I don't think we really move forward any meaningful way. I think we'll know more about tariffs, taxes, and spending in the next 3 to 6 months is my guess. So my advice to most people is just sit tight. Let's get through the next 3 to 6 months, get some clarity on these items, and that'll give us a lot better indication of what's the economic impact of this change that's being talked about. It may be nothing, it may be substantial, but we just don't know right now. So right now, I think the safest bet, sit tight. Let's let things play out. Don't get too concerned with what you see in the news. Stock market does this often. These pullbacks are very normal, regardless of the reason. They're never permanent. They always recover. It's just a matter of time. So we're monitoring this. We're making adjustments, small adjustments as needed, but mostly sitting tight, waiting on things to play out. So I hope that's helpful. Not a lot to change right here, but a lot of moving parts. If you have any questions or need anything from us, reach out anytime. Thank you.